Have you ever stopped to think about the hidden engines of our modern world? I'm not talking about the flashy phones or laptops, but the companies actually building the technology backbone. You know, the power systems, the tiny components, the infrastructure that, well, keeps everything running. They're often unseen, but their impact is just huge. Today, we're doing a deep dive into one of these companies, Delta Electronics, Thailand, or Delta as most people know it. And they're particularly interesting right now because they've been in the news lately for some pretty surprising financial results. Makes their story even more worth exploring.
Absolutely. And our mission here is really to dig deeper than those headlines. We've got the official company fact sheets, financial reports, sure, but also analyst takes, investor commentary. The idea is to pull out the key insights so you can understand not just what happened with Delta, but maybe more importantly, why it matters. For the company, the industry, maybe even for how you think about the global economy.
Okay, so let's unpack Delta itself first. Before we dive into the recent news, what exactly is Delta Electronics? Thailand. Might not be a name everyone knows offhand.
Right. So at its core, Delta is a major player in manufacturing and selling power management solutions, and also specific electronic components. Think things like DC fans, EMI filters. Those are crucial for stopping electronic interference, making sure devices work smoothly, and solenoids, too, which are basically little engines converting electricity to movement. Vital for cars, robots, all sorts of things.
Really fundamental stuff.
Exactly. Often hidden, but absolutely essential for the devices and systems that power our digital lives. And what's really key here is their global reach. They have production sites spread across Asia, Europe, South America. It's not just about being big. It means they're plugged into different markets, different supply chains. Gives them resilience and a pretty significant role globally.
So why should you, our listener, care about a company making these components?
Well, because they're not just obscure parts. They are fundamental to IT infrastructure, to telecoms, industrial automation, and maybe the biggest one right now, the whole electric vehicle sector. That's booming.
Right, so they're literally powering the shift to EVs, even if you don't see their logo on the car.
Precisely. And it's not just about the tech either. They hold an A rating on the SET ESG index as of May 2025. That's not just a badge. It reflects a real commitment to energy-saving, eco-friendly products. It ties right into their mission statement. Smarter, greener, together.
Okay, so a solid company, global reach, focused on key tech and sustainability, which makes the recent news even more interesting. Let's get into their Q2 2025 earnings for April to June. The headline screamed about a big drop in profit, Rafen.
That's right. The Q2 numbers definitely took the market by surprise. Net profit came in at 4,629 million baht. Now that sounds like a lot, but it was down sharply 29.5% compared to the same time last year and down 15.7% from just the previous quarter.
Wow, nearly 30% year over year.
Yeah. And operating profit was 5,098 million baht, with the profit margin falling too, down to 11.5% from 13.9% last year. Significant drops definitely raised some eyebrows.
But here's the kicker, right? If profits fell that much, you'd automatically assume sales took a hit too. Did they?
And that's the puzzle. Because, no, sales actually went up.
But
Yep. Sales reached 44,490 million baht. That's a growth of 6.5% year over year and 4.1% quarter over quarter.
okay, hold on. Sales grew, driven by things like AI and data centers you mentioned.
Exactly. Power electronics, IT infrastructure, those areas were strong, fueled by all the investment going into AI right now.
But profit plummeted. How does that work?
Yeah.
It feels counterintuitive.
It does, and it signals that the problem wasn't a lack of demand. There were deeper issues impacting the bottom line. It's like, oh, costs suddenly ballooned somewhere.
Right, it's like a financial mystery. Sales up, profit down. The market definitely didn't see that coming. So what were these hitting factors? What dragged down the profit despite rising sales?
Well, digging into the company's own explanations and what analysts picked up on, there were several things hitting them all at once. It's quite complex. First off, their operating expenses, what they call SG&A, selling, general, and admin, costs these jumped by 11.3% year over year.
Okay, and what drove that jump? Was it just general inflation?
A big part of it was actually higher customs duties. And that ties into the second major factor, global trade policy changes. Specifically, the U.S. started implementing these equal retaliatory tax policies in Q2.
Retaliatory tariffs.
Essentially, yes. For Delta, it meant they suddenly had to pay U.S. import duties upfront for products going there.
Ouch. Even if they get reimbursed later.
Exactly. They expect clients to reimburse them eventually, but the immediate impact was a big hit to their costs and their cash flow, right there in Q2.
Okay, so unexpected customs costs. What else?
Third, they had to set aside a significant amount of money and make a provision for bad debt.
Bad debt, like a customer not paying.
Pretty much. It was linked to one specific customer in their fan and automotive cooling division who ran into, well, serious business problems and had to restructure their debt. So Delta had to account for potentially not getting paid.
Man, that's just bad luck hitting on top of the terrorist.
It really is. And fourth, there's the R&D spending. Now, investing in research and development is obviously good long-term, core to their strategy, but it is an expense in the short term, and they're investing heavily, nearly 4 billion baht in 2024. That ongoing investment also contributed to the higher expenses in Q2.
Strategic, but still a cost right now.
Precisely. And finally, there were a few other things. Foreign exchange losses played a role because the Thai baht got stronger, which actually hurts export profits when converted back, plus some one-off costs like settling a patent dispute and some extra taxes under new OECD rules.
Wow. So it wasn't just one thing, it was a whole combination. Trade policy, a customer issue, FX, R&D spend.
Exactly. It's a perfect storm, really. And it just shows how complex global business is. Things happening continents away, currency moves, a single client's trouble. It can all cascade down to significantly impact a major company's bottom line.
A real lesson in that global interconnectedness. So given this perfect storm and the surprising numbers, how did the market react? What did the financial analysts make of it all?
Well, the reaction from analysts was generally not positive. Brokerages like Krungsri Securities, Yuan Securities, they both flagged the Q2 results as being quite a bit lower than what the market had been expecting.
Below expectations, okay.
And Yuan Securities was particularly blunt. They kept a sell recommendation on Delta's stock.
A sell. That's strong.
Yeah, and they set a target price of 66 baht, basically saying the stock was, and I quote, very expensive.
Very expensive. Why? What makes it so expensive in their eyes, especially if sales are still growing in key areas like AI?
It really boils down to valuation metrics, specifically the price-to-earnings ratio, or PE. Delta stock was trading at incredibly high PE ratios, something like 80 times its expected 2024 earnings, and maybe 68 times for 2025 earnings.
80 times. That's up there.
Way up there. Analysts basically see that as far too high compared to the company's actual earnings power, its fundamental value, and also compared to its own historical PE levels. Especially now with this profit dip, it makes that high price tag look even less justified in the short term.
So the stock price had run way ahead of the actual profits being generated.
That's the argument, yes.
Yeah.
And Delta isn't just any stock on the Thai exchange. It's huge. Its market cap makes up, almost 12% of the entire stock exchange of Thailand, the ISE index?
11.8%, yeah.
That's massive. So when Delta sneezes, the whole market can feel it. Its performance puts significant pressure on the SET index overall, and it definitely affects how investors feel about other electronic component stocks too.
Creates ripples everywhere.
It does. So the advice from analysts like Yuanta was basically, avoid Delta for now, in the short term. They suggested investors might want to look at other big companies' large caps where money might flow instead. Think energy, chemicals, banking, telco, services.
Burning the risk.
Right. Or, even within the electronics sector, they pointed to competitors like KCE or Hana as maybe safer or laggard plays, meaning they hadn't run up as much and might offer better value.
Okay, so a tough quarter financially. Cautious analysts worried about the valuation. Seems a bit gloomy in the short term. But what about the bigger picture? What's Delta's long-term plan? Are they just focused on surviving this, or is there a deeper strategy at play?
That's such an important question. Because despite these, immediate financial headwinds and the analyst caution, Delta's long-term strategic direction seems quite clear and consistent. They keep coming back to their core mission, creating innovation in clean energy utilization and enhancing energy efficiency for a better future. That's not just talk. We mentioned the R&D spending earlier, that 4 billion baht in 2024. That's a huge, consistent investment backing up that mission.
Right. The R&D spending that hit profits short term is actually a sign of their long-term focus.
Exactly. And it's not just spending money blindly. They've built this global network of R&D centers, Asia, Europe, plus they collaborate closely with top universities around the world. This global setup is smart. It lets them tap into different talent pools, understand regional needs better, and really speed up innovation for different markets. It's about building future capabilities, not just reacting.
And they encourage it internally too, right?
Yeah, they do. They have this Delta Innovation Award program running since, I think, 2008. It encourages employees to come up with ideas for new patents, products, better manufacturing, even new business models, plus other internal awards for production tech and productivity. It fosters that culture of continuous improvement from the ground up.
So innovation isn't just happening in labs, it's across the company.
That seems to be the goal. And it leads to some pretty cool, impactful projects. For example, in Singapore, they're using their automation and energy expertise for a project called the Smart Coral Aquaculture System.
Saving coral reefs with tech.
Essentially, yes. They're trying to use technology to help cultivate thousands of coral pieces to restore reefs. It shows how their core tech can be applied to big environmental challenges.
That's fascinating. Any other examples?
Sure. In Thailand, they've partnered with a property developer, Origin Property, to put smart home and green building solutions into new developments, including things like indoor air quality systems specifically designed to tackle PM 2.5 pollution, that fine particle pollution that's a big health concern.
Practical solutions for real-world problems.
Right. And they're investing in people, too. The Delta Automation Academy project sets up advanced labs in leading Thai universities. They give students hands-on experience, and then they hire a good chunk of the graduates, like 150 new engineers a year since 2015, building their future workforce.
That's a long-term investment in talent.
Definitely.
Yeah.
And one other thing worth mentioning is their ethical stance. They have a clear, explicit policy stating their materials won't be used for weapons or military applications, and they won't supply sanctioned countries like Russia, Iran, North Korea, etc. It shows clear ethical boundaries in their global operations.
Okay, so a strong focus on long-term R&D, innovation, sustainability, talent, and ethics. That provides important context for the recent dip. So bring it all together, the Q2 challenges, the analyst caution, but also the strong long-term vision. What's the outlook now? Can Delta bounce back from these headwinds?
Well, Delta management certainly seems to think so. They're guiding for a recovery in the second half of 2025. They expect sales to improve and profit margins to get back to, quote, normal levels.
And why are they so confident?
They believe the main driver will be getting more clarity on those U.S. tax issues we discussed. Once that's clear, they think new business will flow more easily. In fact, their forecast for the full year 2025 revenue growth is 15-20% year over year. That's actually at the high end of what they previously guided, so it shows strong internal confidence.
50 to 20% growth for the year, despite the Q2 dip.
That's the projection. They see growth really picking up speed in Q3 and Q4, fueled partly by new orders coming in from their entities in Taiwan and Germany, and also by growth in those emerging segments like liquid cooling solutions.
Liquid cooling essential for the really high-powered AI chips and data centers, right?
Exactly. It's a critical growing area, and they're positioning themselves there. Now, they do acknowledge the risks: global uncertainties, geopolitical tensions, trade wars. Those haven't gone away, but the message is they're trying to stay strategically prepared, leaning into those high-growth AI and data center markets.
It really is striking, isn't it? Watching a company this big navigate those immediate punches from the market, the tariffs, the costs, while simultaneously keeping their foot firmly on the accelerator for long-term innovation and sustainability, even if it means taking a short-term profit hit. They're clearly playing the long game. So there you have it. Our deep dive into Delta Electronics, Thailand. It really shows a global tech leader grappling with the messy realities of today's interconnected world. Yes, they took a significant hit to Q2 profit, a perfect storm of new tariffs, a strong local currency, bad debt, other costs. But crucially, their underlying sales stayed strong, pulled along by that relentless demand in areas like AI infrastructure.
Absolutely. And we've seen this sharp contrast, haven't we, between the short-term financial squeeze and the analyst caution on one side, and on the other side, this really robust, consistent long-term strategy focused on continuous R&D, innovation everywhere, and a very clear commitment to being greener and more sustainable. They're not just trying to react to the market, they seem focused on actively shaping the future of energy efficiency and smart tech, using their deep technical know-how.
So as you think about Delta's story, here's a final thought to chew on. What does this company's recent experience really tell us about the hidden, sometimes really unexpected costs of doing business globally today? And maybe more fundamentally, how should we measure the true value of a company that's constantly balancing that immediate financial performance against long-term tech leadership and a genuine commitment to a smarter, greener future?